Everyone, welcome to day 6 of Newfound Market Missions. Great to have you all turn up again. And today is going to be a very interesting day because it will tell you stuff that perhaps you thought you knew, but in fact, there's more lessons to be learned. Before we talk about today's sessions, I just wanted to obviously quickly recap on yesterday. Dan Lowther of CC Group did a great job moderating the panel that talked about building traction with Adiza Tajani of HSBC, John Salter of Clearbank, and Alan Hamilton of Bridgepond. And certainly that was a good session, giving people real insight of buying behaviors and selling capabilities that are required to sort of do well in the UK. You know, obviously the takeaways that selling into large banks and large financial institutions takes time, so maybe sort of starting off with the partner-led approach or selling into smaller, earlier stage organizations may be the right path, but of course that needs to be determined. And then the second session, Jeremy Bassett, who of course is going to be leading the pitch day on the 29th. He was talking together with Ali Shuggi of Santander and Alex Barkley of HSBC Ventures about getting, I suppose, into those organizations, looking at how to get into the innovation parts of these large organizations so that you can position yourself as a potential partner and customer. So just quickly on the pitch day, I know that many of you have already signed up for it, but also many of you have yet to. I urge you to do so. And of course, we'll be sharing more information in the next 24 hours about it. But of course, the session on Thursday, the final session on Thursday, will be giving you a lot more details about what to expect. There's going to be some panels. There's going to be some feedback, so you get lots in return. And of course, we want to make sure you're prepared for the pitch day. So definitely well worth registering. So please do so on the links that have been sent, and we'll be sending another link today, and making sure that we can get as many of you into the pitch day as possible. Right, today's session, research. I think we're all familiar with the term, and most of us think we're pretty good at it, and most of us think that we know what to expect. But in reality, and certainly from my own experience working with many companies over the years, most companies don't prepare enough, don't research enough, don't have enough insights, and therefore are prone to making errors or making assumptions that could really impact their plans, particularly entering into new markets. And that's why we've asked our good friends at Savanta to do a masterclass. We work closely with them on a number of projects over the years, and they really bring a discipline and an expertise that's really hard to find in the marketplace, particularly around knowledge of the tech industry. And of course, their work with us really gives input into our sort of key product around go, no go. And once again, that vital research that companies need to have to make decisions. In fact, I was speaking to one of the CEOs of the program yesterday, and they're reaching a point of having to sort of make a key decision about which market and why and so forth. And I sense that if they had some more data, that decision will be easier. And so this is what today's all about: getting that sort of real stream of input that allows you to make better decisions. And so today we've got Chris Walcott and Graham Cade of Savanta, who will be sort of taking us through this. This is a masterclass, so you can ask away at any time throughout the session, put your video on, and once again, it's very interactive. So there's not any meet the speakers session afterwards as per normal, but once again, this is about interaction. So I'll hand over to Chris, and then of course, before we do that, we've got Jerry Witwinski at Edelman's doing a brand masterclass as well. So Chris, good to have you, and Graham, so over to you guys, and I'll sit in the background. Thank you.
Perfect. Very much. Thanks very much, Peter. I will open up and share my screen now, so hopefully you'll be able to see what's going on. Yeah, thank you all for joining us, and looking forward to taking you through this session today. So like Peter says, we have worked with Newfound particularly a lot on this go, no go side of things, in terms of getting research together that helps you understand a market, understand in detail, in order to decide whether it's worth entering or not. And we're going to go through a little bit of just generally the importance of research and why you should be investing in research, and also specifically looking at go and market entry. Just to give you a little bit of background on who on earth we are, staring at your screens. So myself and Graham are both work at Savanta. We're a specialist market research consultancy. Both of us have experience in Savanta for a few years, and previously, before that, in a company called Circle Research, who specialised in B2B and technology research. So got a lot of experience in this sector. Particularly, like we say, B2B tech and finance. So we've worked with a lot of big brands, but also smaller brands who are looking to either look into new markets or look to launch new products a lot of the time, or look to launch new brand positionings. And there's a lot of learnings that can be taken from across those different types of products that we do, type of work that we do. So yeah, as we say, we'll go through this in detail, but I thought it'd just be good to get a bit of context at first. So obviously we are a market research agency, and we always think that investing in market research is a good idea. What you're seeing on the screen now is a piece of research that our parent agency, a PR and communications company, did with their clients very recently in response to obviously what's going on in the world right now, going, okay, what are people's priorities? What are people looking to achieve at the moment? And what we saw is when we were looking at, okay, what are the focus areas for your businesses? What the big opportunity or challenge areas? Obviously, number one is looking for new ways of working post-COVID. It's unsurprising that that comes out as the most important factor at the moment. But straight after that, above a lot of areas that we might have expected to come out higher around technology, around sustainability and ESG and things like that, is customer and market insight. So it's really clear that while we always believe that investing in good research is obviously vitally important, I think it's particularly important at the moment, given how much uncertainty is, and wanting to know actually what is it that our either customers or prospects or markets are actually looking for. Part of the reason that there's so much interest in research at the moment is that generally when people think of research, they think of, I have a specific question that I want answered, and therefore I'm going to do some research. So that could be, I want to know what my customers think of me. I don't know what my customers think of me. I want to know. It could be, I don't know what my brand is like. I don't know what market I should enter. And that's obviously a good place to start with research. But it is worth noting that it really should only be part of the picture. So when it comes to research, there's obviously, there may be a question that you want answered, but equally, it may be that there's something that we think we know that we're not sure. So we've had a lot of clients in the past saying, you know what, I think I am a technology business. I think these new audience I'm going after, the quality of the app that I'm offering is going to be the most important thing. We've had it in the past where that's a client was certain that that was going to be vitally important, and we're going to be investing hugely in their app development. When we did the research, it was important, but to be honest, they were in a much more commoditized market than they thought, and actually price was particularly important. And so it's always really clear, make sure to, even if there's something that we think we know, we need to make sure that we're 100% clear on that. Similarly, that third box in the bottom left is wanting detail about the things we know. So again, it may be that a company goes, you know what, I think app quality is number one most important thing in my new market, but actually I want to know the details behind that. I want to know specifically, what do they mean by that? What specific functionalities, what specific aspects of the app? And also, are there different audiences? So is there a particular audience, like 9 out of my 10 audiences or 4 out of my 5 types of customer who that is the most important thing, but actually there's this segment that I need to be aware of. And then the fourth point, which is possibly the most important one, is the idea of not knowing what you don't know. And so many people miss research for this reason. And actually it's a particularly biggest area of opportunity that people miss when it comes to research. There's often things that people aren't aware they don't know, particularly about a new market they're entering. And we'll talk about that in a little bit in a second. But like I say, those go for all areas of research, but we've had numerous experience of people not being sure about these various things, specifically when it comes to market entry and when they're looking to do research to enter a new market. These are all based off examples we've had from clients we've worked with very recently. And the top left, a question we want answered, we say, okay, who are the existing players in this market? So who are going to be our competitors? Who is it we're going to be coming up against? A player who's saying, you know, there's something I think I know, but I'm not sure. So in this case, they were looking at regulations and thinking, okay, I'm pretty sure the regulations are pretty similar in my market to what they are in the UK. But I want to be sure that I want to know that. And actually it turned out it was quite a lot more strict for this particular situation in the UK than they'd expected. How do prospects prioritize different product features? So again, I had a company recently coming to us and going, look, I think there's these 4 things that are most important to us as a tech business, but actually how are they priorities? I want to know the details of that. Is it there 4 that are pretty equal, or is there one that really stands out? Is there certain ones that are hygiene, certain ones that are differentiating for me as a brand? And then the most important one when it comes to market entry is that bottom right, saying, I don't know what I don't know. And we're going to talk a little bit later about partner research, but this is probably one area where market entry research lacks in particular, is coming to the idea of, am I missing a potential partner opportunity? So when people are entering markets, they may have a specific idea of the sort of company they might look to partner with, but actually it may be when they go into that market, there's people they haven't even considered. A good example is actually trying to think, okay, forget my industry. Are there people who are already providing a service to the same people that I'm going to try and provide a service to? And actually, regardless of the type of company that is then a potential partner opportunity, because you've already got a sales channel there, and it could be something that you offer a complementary service to. So that's just a very introductory background to research in general, in terms of just a sense of when should we be looking at research. Yes, it's when we want a question answered, we should be looking to find stuff out, but there's a lot more to that. That's only a real part of the picture. We're going to move on now to talk a little bit around, okay, what's the consequences of not engaging with research, and what happens if we don't go ahead with that. And I'm going to hand over to my colleague Graham to talk us through that briefly, and then I'll be back shortly.
Thank you very much, Chris. Hi, everyone. Pleasure to be here today. As Chris mentioned, he gave me a little bit of an introduction as to our background at Savanta. Just give you a little bit more context on myself and why I'm here speaking to you today. So my background initially was in engineering before being a strategy consultant for a while, where I did a lot of work on market entry strategies and advising clients on new product launches. Before entering the world of market research, where I was the MD of the B2B research consultancy Chris mentioned before Savanta. And the only reason really for mentioning that is that in all of that time, both as a consultant, strategy consultant and a researcher, I have seen a lot of companies try to enter new markets, try to launch new services, new markets, and would like to think that along the way, I've learned a little bit about why research is critical to this process and how it can go very well, and how, if it's not done very well, things can go very badly as well. And so I want to just spend a little bit of time before handing back to Chris to talk through some more of the practicalities, just to share some anecdotes on this topic with everyone to set the scene. So if you want to flip over to the next slide, please, Chris. I guess, as Peter mentioned at the start, we all like to think that we can do research, and there is definitely a temptation, particularly when we're looking at market entry, to try and kind of bundle together research together with a bit of sales, a bit of prospecting, and do it all in one. And, you know, in a lot of senses, that makes intuitive sense. You are already speaking with a prospect, so why not use the same opportunity to find out about some market insights and also tee them up for hopefully a future sales opportunity. There are some problems with this, so that we come across very regularly. And those problems tend to center around the fact that what you're getting here out of that process is a very biased view rather than a full and objective view of the market. So when you try to do this and combine research with sales and prospecting and mix them all in together, what you tend to end up with is a research process that is rushed. You don't have sufficient time to spend on really the details, and you're wanting to make sure you're getting onto other parts of the conversation as well, which means that you tend to lack an organized approach, and you can miss key insights along the way. It also often ends up that what you don't get is a representative and reliable view of the audience. So one of the sort of key principles of market research is that you want to make sure that the people that you are accessing are going to give you a really representative and reliable view of the market that you are looking at. If you bias the audience that you are looking at, then you're going to bias the results as well. And unless you take a very research-led and organized approach towards doing this, it's likely that the sample that you are looking at will not be that reflective view of the market. And so whilst you get an idea of what's going on, you don't realize that's actually perhaps a niche or an oddity in one little corner of the market, and there's a lot else going on that you're not aware of. The other challenge as well is that if you go into this process, and of course I am going to talk about the benefits of working with a separate research agency, but I do honestly believe in this as well, is that if you go and try and do your own research, you tend to have the blinkers on. So you are very heavily invested in the products or the service that you're trying to launch to the market. You probably have a very set way of thinking in your mind at the moment about what you think is going to work, what you want to work. You've invested a lot of time and effort into it already. And that tends to focus the attention quite narrowly and mean that you're not looking wide enough for all the potential opportunities that are out there. And you can miss some really valuable and important insights because your mind is currently going down one direction and it doesn't actually think perhaps to look a lot wider than that. And that's sort of related to the sort of 4 points around as well around no guard against unconscious bias. It is very, very easy in research to get the answers that you want, even if they're not the correct answers. Particularly, there is something that we talk with clients around a lot called affirmation bias, which is that everybody likes to give answers of yes, and everybody likes to get that sort of positive recognition of feeling like, yes, we're in agreement and everything's good. And so if you frame questions in such a way that you are encouraging a certain answer, you are likely to get that answer back, even if it's not the true view of the market. And so there's a risk that you can come to false conclusions because of the way that you're posing the questions and the way you're approaching the topic. And then I guess the final couple of areas just to mention as well is in terms of the bottom right, the sort of sales focus can bias or hinder findings, as well as those leading questions. It is also very understandable that if you're super engaged in the program and in the market launch, that you can have a little bit of selective hearing. So we have worked with many clients in the past where we've had to actually spend quite a lot of time working with them to allow them to understand that there is a series of findings that we're getting back, and not just the ones that fit with their narrative and the ones they want to hear, but other ones they need to be aware of and take into serious consideration as well. And making sure that that strong focus that that you have in the mind or the effort that's gone in isn't producing selective hearing and actually blocking out really important insights that you need to be aware of. And then very finally in the bottom left there, the fact that if research isn't prioritized and done early on, then unfortunately you can often end up being too late in the journey to really do anything about the market insights that you find when you do uncover them. So there's a real need for this to be an early stage process as well, so that you can give yourself as much scope as possible to direct your efforts in the best direction. So there's a lot of potential dangers of not taking research seriously. And, you know, I think this is not just anecdotal as well, but it's things that we have seen working with the Newfound team as well and their clients. I know there was one project recently where both ourselves as Savanta were going out and finding people to engage with and do research with, and at the same time the client was doing some of their own research as well and finding people to have similar conversations with. And the feedback that we got, which is what we would normally expect, but it was good to hear it and get it validated as well, is that they just got a huge amount more usable and actionable and fuller insights from the people that we had found and the conversations that we had had than the ones that the client had got themselves. And that's no criticism of the client whatsoever, other than it's just purely due to the fact that they are two very different approaches, and how the whole engagement is framed and the way that people are approached and the way that they are engaged and the style that is taken to do this engagement can come out with very different results in the end. And so we want to talk a little bit as well about some of the consequences of not doing this research. both from a negative lens. So what is the potential problems that can occur if you don't do research? And also from a little bit of a positive lens as well, though, in terms of what are some of the opportunities that you can uncover through doing high quality research. And I want to share with you a couple of anecdotal examples of where we have seen both of these things arise with our clients' engagements in the past. So in terms of that first one around making a strategic error, we worked not long ago with an IT company who were looking to enter an adjacent market. And in order to do this, they had decided that they needed a new brand to put behind this launch. They had come up with a brand, they had created messaging and positioning, they'd even created some collateral to support it. And at the relatively last minute, they thought, actually, you know what, before pressing the play button, we should really go ahead and test that this is something that is going to resonate with the market, and this is a good brand positioning to be going in with. And the brand position that they had come up with was very confident. It was very self-assured. It was quite a bold positioning. It was a positioning that was basically going out to the market and saying, hey, we're great. We've got lots of expertise. Work with us. And so we did a bit of research around this, engaging with prospects in this market they are looking to enter. And unfortunately, what we found out was that there were some very real pitfalls of this messaging and brand position they were looking to go in with. Particularly, this was a market where people were relatively risk averse. And also there was a big emphasis on humility and collaboration, and the importance of partnerships where people, yes, talk about their strengths, but also understand the limitations and work together in sort of a harmony and collaborative way in order to identify and continuously build going forwards. And the feeling was that this new player potentially coming into the market with this positioning of we're great, we can do everything, was going to be incredibly dangerous, because the reactions that we were getting to this position was, it's just not credible. It's arrogant. It makes me think they're cowboys. I wouldn't trust them. There's nobody who can do this. I know the market. I know that that positioning isn't real. So I'm going to dismiss them out of hand as a joke. And so that was absolutely critical insights for them to find out. It unfortunately came at the very last moment when they had already invested in a lot of the brand strategy and the brand building. But at least these insights did come in time to allow them to change their approach, to change the narrative that they were putting behind their launch, so as not to alienate this market and to give them the best chance possible of resonating with their prospects. So those are the sort of strategic errors that potentially can come about without doing research. On the flip side, we also want to talk about sort of the opportunities that can present themselves from doing good research. And a good example of this is we worked with a company that actually was in the recruitment space. They had quite a tech-based recruitment offering, and they wanted specifically to enter the UK universities market, and to do that with providing personnel for specific roles, particularly around the social and mental health care provisions that universities needed. And our brief in this was basically to go out and find out, okay, how can they differentiate their recruitment offering versus other people's recruitment offerings? However, what was really interesting in terms of conducting the research that we did was that we found out that there was a real gap in the market, and that the universities that we were engaging with were telling us, you know what, there's lots of different recruitment providers out there, all providing pretty similar services. We don't want to work with a recruitment provider. What we actually really want is for more of an outsourced service provision. So someone who can, yes, find those personnel that we need to provide the services, but can actually manage the whole process for us. So they can manage the contracting, they can manage the resourcing, they can manage the day-to-day staffing to make sure that we have that service guaranteed, and we don't need to worry about it, and we can actually just leave it all with that provider. And that is a much more significant monetary opportunity, but one that they were happy to spend on in order to take away a lot of the pain and difficulty they were feeling at the moment with trying to manage all those processes themselves in-house. So Our response back to the client was around this new opportunity that they didn't know about, which they decided to very much take on board. They changed their approach. They provided this different type of service to the market, and very pleased to say it led to them actually gaining huge success and doubling their revenues in the space of only about 18 months. So as well as being potential real pitfalls and errors from not doing good research, it can also open up, when you do good research, fantastic opportunities, many of which you might not have ever thought about before. Now, of course, we can't promise that any research engagement we work with will always open up opportunities to double revenues in very short spaces of time. But it's the type of thing that I think is very much worth investing in, and you'd be kicking yourself if further down the line there became apparent that there was this opportunity that you just weren't aware of due to not having done the research up front. But it's not just about these big ticket items, whether they be wins or losses, and big change to strategy. There's also much more tactical benefits that research can bring. Thank you, Chris. Expecting what I was going to want to say there very well. And three of these real tactical benefits are the ones we see on the screen there at the moment. So there's a real benefit around minimizing risk, and basically just understanding often quite small tactical steps that you need to take in order to avoid pitfalls along the process. So Chris, for example, spoke a short while ago around the company that we worked with who had this question around regulations. And we think the regulatory market or the regulatory conditions is quite similar in the UK than it is in the markets that we're currently in at the moment. Can we just go and verify that? And what we actually found, as Chris mentioned, was that it was slightly more complex and there was a little bit more involved in terms of the regulatory situation in the UK than the market they're in currently. Now, that was not a major blocker or a major barrier to them launching in the UK. It just meant that they had to take steps now in order to minimize their risk and make sure that there weren't going to be hurdles or blockers in their way when they did launch the solution. The second is around reducing costs, which might seem strange when we're talking about something that you have to invest in. Research is sadly not free. There is a cost involved in doing it well, but when done well, it should actually result in a net gain to the business. Particularly one of the ways that we find that research can be really helpful in reducing costs is around discarding low potential opportunities. So, for example, it may be that thinking about a new launch, there are a few different channels that you are thinking about potentially pursuing in order to get this product into market. If the research can recognize that, say, maybe of the 4 channels that you're considering, 2 of them are really high opportunities, 2 of them are pretty low opportunities, well, that can allow you to focus on just the 2 highest opportunities, put your money behind those, save your money from not investing in the other channels, and therefore get some quite substantial efficiency and cost savings overall. And the final one, again, which may seem slightly strange because we are talking about a research process that takes time, is that just as it should save you money, it should also actually help you get to market quicker. And this can be a combination of a few things. So it can be about having that increased focus, only going after the channels that are most profitable and most highest opportunity for you. It can be about that minimizing the risk and anticipating the hurdles before they arrive so that you can overcome them nice and easily. And it also, though, importantly, is around giving you confidence. One of the biggest things that we find that delay launches into new markets is uncertainty and not being sure whether to do something or not, and therefore taking time to ponder it, to consider it, and this can slow the whole process down quite a lot. And so one of the big benefits actually research can provide is just giving you the confidence to proceed with conviction and knowing that you are taking a good decision, and that can actually be hugely beneficial in terms of speeding up that time to market. So there you go. That's all I wanted to really chat about, but just give a few smidgens of my experience as to why research is so important when you're looking at market entry and how it can go very well, how it can also help to avoid some quite large potential catastrophes. And on which note, I will now hand back to Chris, who is going to talk through some more of the practicalities of how you actually get value out of market research.
Excellent. Thanks very much, Graham. Yeah, so
Just let you know, Chris, you're on mute.
oh, I've been muted.
You're back on mute.
You've got two of us playing the mute game. Yeah, thanks very much, Graham.
You are still on mute, I'm afraid, Chris, unless this is just me having an issue.
He's fine. He's fine, Graham. He's good.
We're good. Yeah, so thanks, Graham, for taking us through that. I think what would be good to talk through now, we've talked about, obviously, investments in research, why or why not to go ahead in that sort of area. I think one thing that I've led internally at Savanta is a lot of the work we've done with Newfound and with other clients in terms of actually entering markets. And so what we want to look at now is very briefly how to get the most value out of market entry research specifically. We're going to look at a few different areas within that, looking at it not being one size fits all, choosing the right approach, and then we'll look at 5 key areas that we want to be looking at in any market entry research program. We could probably talk about this for several hours, but what we'll do is focus on some of the key points. And hopefully you'll come away here thinking, okay, if we're investing in this research, these are the key things that we really need to think about. So to start with, looking at this idea of it's not one size fits all, the most important thing here is actually thinking about, okay, where are we on the journey? And we often get kind of linked to what Graham was talking about earlier, where people sometimes leave it too late. You also get the opposite happening as well when it comes to market entry research, where people haven't fully thought through where they are on their entry journey and therefore where they want to, what sort of research will be most appropriate. So we've conducted research for all of these different types of clients. So sometimes it's a case of they're actually just considering whether they want to enter a market or not, in which case it's more of a program of actually coming up with criteria, thinking, okay, what would make a market particularly valuable to enter, and assessing whether markets that they potentially would be interested in entering actually meet those criteria. Where you look down the other end of the scale, and you've got people saying, okay, I've already decided, you know, we're looking at a particular market. Now I want to actually validate that decision. Is it one that's worth going ahead with? And therefore we need a much more detailed program, detailing the market landscape, understanding key players, who are the key competitors potentially. And sometimes it's a case of actually you'll get people coming to you who are at that third stage, asking you for a program of research that's more aligned to the first stage, or vice versa. People who are very early on looking for a particular market, and you actually think, you know what, have you decided whether this is the right market for you? Have you done any assessment of that? And then right down that fourth end, which is comes later on, but is 100% vital, is actually understanding how to enter that market. And we'll come on and talk a little bit later about the different ways that we can understand validating a market versus going ahead and entering a market. It's also worth, as we say, really focusing on making sure we're choosing the right approach. Now, the reason we pulled this up is that so often, understandably, when people think of research, their mind immediately jumps to quantitative research and surveys. So they'll think of the sort of thing that you might get asked whenever you have a transaction on any website where it comes up and asks you for your quick opinion. That's a lot of what people think of with research. Equally, they think of they're walking down the street and someone stops them with a clipboard and asks them a few direct questions, that sort of thing for research. And often we'll have people approach us going, okay, we want to speak to people. How many people should we speak to? Should we speak to 100 people? Should we speak to 200 people? And that's immediately their kind of understanding of research. We almost always, and particularly when it comes to B2B, suggest that's not the right approach when it comes to market entry. First of all, you need to know what you're asking. So often when it's at early stages of market entry, you're really looking to understand, okay, what is it that I don't know? Or what are the details? What are the things I specifically would need to ask a wider audience? And so actually, you want to be able to dig into detail as opposed to just having some set specific questions that you're just getting numbers for. You want to understand the why as much as you're understanding the what behind it. When it comes to B2B, these audiences can be difficult to access. And this isn't just specific to market entry research, but we're going to be wanting to speak to decision makers, speak to people in senior positions, and they can be difficult and therefore can be very expensive to access, which is obviously can be tricky at the early stages of market entry. And so that's why we always say that this is better coming later on. There's massive value in quantitative research, but we always think that it's a kind of later stage when it comes to market entry. The bits that are often overlooked as opposed to quantitative research are secondary research and qualitative insight. And particularly secondary research is one that people tend to usually will do a certain amount of internally when they're looking at entering a new market, but often it'll be a bit ad hoc. Often it looks at specific areas, or there's not a lot of time or any sort of structure invested in secondary research. There's actually a huge amount of value that comes from secondary research, and that can, we'll talk a little bit about the different sources that you can be used in a minute, but we've had programs very recently. We had a fintech player who we were working with, where we were able to develop a full segmentation for them entirely based on secondary research. So often the approach with secondary research is, okay, we'll get a little bit of insight into one specific area, but really we need to be doing some surveys. Actually, a lot of the time, and there's a lot more value than you think that can come out of secondary research. And the second is qualitative insight. That's so essential for early stage development. So as I said, with needing to know what you're asking, let's say you have a question where you go, what are the rank these 10 things in terms of priority? How do you come up with those 10 things? That's really where qualitative insight comes in. Or here's these 10 questions we've come up to ask in our survey, but actually are there 3, 4, 5 other questions that we have never even thought of, that when we talk to these people, we will understand more and we'll know that those are things we need to ask. So when it comes to qualitative insight, what we recommend is sitting down, usually not face-to-face, and particularly not face-to-face at the moment, but getting an hour-long conversation with a senior person can provide a huge amount of value, as opposed to asking a survey of a lot of people at this stage. And that's why it's so essential at this stage. I think the one thing that is worth noting, though, is that there are specific pointers for conducting these sorts of discussions. The first is that it should be a discussion, not a Q&A. Again, when we say we want to make sure that we find out things that we wouldn't necessarily already know, it really needs to be a conversation that the respondent is leading. So if we're talking to someone, we'll have a guide, and we call it a discussion guide that we've written. We specifically don't call it a questionnaire because it's not to be followed religiously. It's a case of going, okay, we've got a sort of topic that we want to talk about, but we let them go ahead. We'll let them talk in depth. We'll let them talk about what's important to them. We'll let them open up tangents. And that's how you really get value out of these sorts of conversation, is by letting them lead the conversation and giving you insights that you potentially weren't even necessarily directly going to ask about. Something Graham alluded to earlier is independence, and ideally anonymity is key. Now, practically, it's sometimes not possible to have completely independent or completely anonymous research, but we always recommend to go as far down that way as we can. Links back to some of the things Graham was mentioning earlier, where even when it's not conscious, and there's always a bias when conducting research that isn't being independently run. So that could be in terms of giving more affirmation and giving more positive responses, but also it can be about topics. So for example, if you are a provider who solves a particular financial issue, so maybe it's around speed of payments, that is a thing that your particular app or your particular product solves, and it's a frustration there. If they know that that's what you do, if you start talking about frustrations or areas of interest, they're naturally going to be inclined to start thinking about that because that's already in their minds. Whereas obviously if they aren't aware what you're, who you are, who it is, what the kind of goal is behind the research, they're much more likely to give you a clear view, an independent view, and actually it can give you better insight than potentially it might have individually, because you start asking them, okay, what are their frustrations? What is it that keeps them up at night? And we go, okay, that's not necessarily what we expected, but there is a way that what we do can talk to that frustration as well. There's always the quote that sometimes gets leveled against market research around, it's a Henry Ford quote saying, if I'd asked people what they wanted, they would have said faster horses. And actually what they wanted was a car. But the thing that is, and that's completely true, but it's about making sure we're asking these questions in the right way. So rather than being completely pointed and directed and saying, okay, what are your top 3 things that you want, or what innovation would you like to see in the market? It's asking these questions slightly more softly and independently. Okay, what are your key frustrations? What is it that keeps you up at night? What is it that you wish existed that didn't exist? And that'll give you a much clearer read and an ability to develop something in a new market that really solves a problem. And then finally, this is repeating what Graham says earlier, but it's so important, is don't try and sell to them. So often, research and sales gets conflated. And actually, it happens even in the setup. So as Graham was alluded to, even when it's a case of positioning a conversation with someone, if they think that this is going to be a sales conversation, one, they're less likely to take part. Surprisingly, they like talking about their own businesses. They don't like being sold to. And so when it's positioned as insight, they're much more likely to talk. But also, it means that they're not expecting a particular agenda. They're not thinking, okay, if I say this, are they therefore going to assume this, and therefore I shouldn't say it? It's much more open conversation. And that goes to, in the way the conversation is positioned, and also the questions that are asked throughout. And then finally, the final kind of area we're going to look through in a bit more detail is going, okay, let's look at some of the details of market entry research and the programs that we've run before. Now, to a certain extent, it will be entirely bespoke every time. There's certain elements that will be more important for some people. For example, we talked earlier about a company who is particularly interested in regulations. There'll be some companies who are particularly keen to understand about competitors, and there'll be some companies who are particularly keen to understand about trends and how they're different from their current markets. But broadly speaking, whenever we enter a market research for market entry, we're looking at these kind of 5 questions. We're looking at how big is the potential opportunity, so looking at market sizing. We're looking at what's happening in the market at the moment, so looking at market trends. We're looking at who are the people we'll be up against, so that's a competitive landscape. We're looking at who are the people we might be selling to, so who are our prospects. And then finally, who is it that we can work with to gain traction and help us grow quickly, and that's partner analysis. Now, what we're going to do is we're going to go through each of these one at a time. We're not going to go into the detail of each, as we can obviously probably talk at length about each of these 5 different areas and how you can do it well, how you can do it differently for different audiences, etc. But what we're going to do is go through each one and just briefly explore 1 or 2 key considerations that if you are progressing with research when you're entering a market, you really want to be thinking about in these areas. So it won't be comprehensive, but hopefully it will give you a few kind of key insights into these different areas of research. So in terms of consideration for market sizing, the main thing that, again, based off of our experience that clients haven't necessarily always thought of, is actually different aspects of market sizing are going to be relevant for different businesses. So when it comes to going, okay, what is our market size? For some businesses, the most important thing might be overall financial size of the market. So, okay, this market is worth X billion pounds or X million pounds in the UK at the moment. And that's actually what they should be using as, okay, we're therefore targeting this number of revenues, and therefore we have to achieve X percentage in terms of penetration of the market. Often it's number of potential clients. So, okay, actually thinking about it, how many businesses are there that we could potentially sell to in the UK? Are we a very niche product and actually we're only selling to 4 or 5 very big businesses? Or is it that there's thousands of these businesses out there that we can sell to? Closely linked to that is number of potential end users. So you could have a market, thinking about those 2 middle ones, you could have very different markets. One where you've got 4 clients who offer maybe a software package that you want to add value to that have thousands and thousands of users each. Or equally, you could have hundreds of different potential clients, each with just a small number of users. Now, the reason it's so important to understand those 2 different market sizings is it can have a big impact on business models. So again, we've had conversations with clients before who have, in their current markets, got a business model where they have a flat fee, where they have a large number of potential clients, and therefore it's a flat fee for their services. Whereas when they wanted to enter a new market, there was actually only a small number of clients, but they each had a large number of users. And so they really had to explore a per user fee, a usage fee when it came to the software they were looking to implement. So it's really important to understand the distinctions there and which is the one that, what the differences are and how that might impact you as a business. And then finally, obviously growth, market sizing. It's all well and good to say a market is a certain size. If we then see that it's been shrinking for the last 5 years massively, then that's obviously a key piece of information to know. So consideration when it comes to market sizing is very much making sure we're not just taking one approach, and we're actually looking quite broadly at what a market size means. Market trends, we've got a similar situation where the most important thing, the kind of key consideration we come up across in these projects is making sure to scout a wide range of resources. Again, coming back to this idea that sometimes research isn't fully invested in and it's not a fully structured or organized program. A lot of people will look at a couple of key sources going, okay, I know this publication, or I know this analyst is particularly knowledgeable about this market in the UK, and therefore I'll go and look at what they say, read what they've talked about, and get a good understanding of the market. Now, that's obviously a good thing to be doing. You want to be going out and looking there, but it's really, really important, and something that people often don't do is making sure they get a real breadth of information. So we're not just looking at a particular analyst or a particular website. We're looking at a range of different areas. Okay, what are our potential competitors talking about? They'll obviously, mostly they'll have a blog, or they'll have a news page, or they'll have market updates, or potentially will be, depending on the type of competitor, we'll be looking at annual reports and go, okay, what are they actually talking about? Looking at news articles, again, where relevant, going, okay, there's going to be publications in this area. What are they talking about? Industry commentators and bloggers, regulators, trade associations. There's a whole range of different places we should be looking, and not just making sure we don't get pigeonholed, because fundamentally there's always going to be a certain area where if you speak to a certain person, they're going to have a particular area they're more interested in, or they think is more important, impactful in the market. And actually we might be missing something that maybe a trade association would tell you that a news article wouldn't, or that a regulator wouldn't. So the key consideration when it comes to trends is making sure we're looking at a wide range of sources. Competitive landscape. Now, this is obviously probably an area where very few people would consider entering a market without doing this to a certain extent. Now, I wouldn't worry too much about being able to see, read in detail what's on the page, because I'll talk you through what's going on here and what we're trying to get across, and what's actually written isn't that important. But what we're saying is that what the key consideration with competitive landscape is, it's really important to start broad and then to zoom in. And so what we mean by that is, so often people will do the middle of these three steps in their competitive landscapes. They will take a certain number of customers. So this was for quoting software, and they'll go, okay, here's a certain number of customers that through talking to people or through a little bit of research, we've come up with as potential competitors. And there we go. Now we've got our competitive landscape, and we can understand who are the people we're competing against. Now that's really important. That's really key to do. But what often gets missed out is the previous step and the after step. The previous step being actually stepping back and taking a much broader look at the market. So rather than just going, okay, here's the key players, who are the biggest players, or here's the ones that come up in initial conversations or initial kind of searches online. And we want to go, okay, let's look much more broadly. Let's look for industry lists. Let's look at SIC codes. So that's a list of companies that within a certain segment, according to government and national statistics. Let's look at ones that are kind of, they offer it as part of their service, but they actually have a broader offering, or maybe they have a much more distinct offering and they offer part of what you're offering as a business. And actually, a lot of people don't do that much broader sense of, okay, let's get a much wider view of the market, and then we can narrow it down to go, okay, here are the top players within that. And then similarly, what people often then don't do is going, okay, we've got these shortlisted companies, let's do a bit more of a deep dive to understand who are we really competing with when it comes to specific product features and specific messages. So we had a job we did recently. Again, it was a different quoting software piece of work, where they had kind of thought they were in a fairly competitive market based on initial research they had done. And actually they were in a fairly competitive market based on kind of the middle approach here to competitive landscaping. But actually when we dug into it and looked at, okay, how are these different players marketing themselves? What are the kind of audiences they're going after? What are the messages they're targeting? It turned out there were really only one or two relatively small players that actually competed in the same specific areas that the client we were working with did. So it's really important to understand, okay, it's not just about that they do the same sort of thing as us. We want to know who their target audience is, what their messaging is, and get a real deeper view of that. Next area, the fourth of the 5 areas, is looking at prospect analysis. And really what we're saying here is prospect analysis should be built on market sizing. So Market sizing is obviously getting an understanding, as we talked about the market as a whole, whether that, as we said, being the number of players we have, whether it be the overall financial size, whether it be growth metrics. One of the things that we can do in B2B is that we can get a much more detail here. So in B2C markets, obviously, it'll be very difficult to produce a full list of all the potential prospects you have in a particular market. You're probably going to be more looking at just trying to do a quantitative segmentation of the market. But actually, one of the advantages of B2B technology in particular is we can go, okay, actually, let's see if we can get as close to a comprehensive list of all the people we might be selling to as possible. So this is an example of one of the times we've done that, where we were able to go by talking to trade associations and looking at national statistics. We were able to pull a list of all the potential customers that might exist in this new UK market when they were looking to enter. Obviously, once we've done that, we were then able to segment them, looking at size, looking at the different type of company. So here we were looking at people in kind of the financial space, looking at the difference between stockbrokers or wealth management firms or financial advisory firms, going, okay, actually, now we can see that there's particular areas where there are many more companies in the market, or they're a much bigger opportunity, either at an overall level, or when we're looking at, okay, we want to target big players, or we want to target SMEs, or we want to target medium-sized businesses. So that enables you to really detail the market, and then link to that, then going even more detailed and being able to target specifically. So let's say they wanted to, looking at that top left box of the segment, they want to say, we want to target this type of firm at this size. And then we have the real opportunity to go, okay, we know that there's this many of those companies. Let's give a brief overview of a profile of these companies to give us a real head start when it comes to sales process. So I think the thing that sometimes people stop at the market sizing and understanding, and they get a overall view of the market, and they maybe know who some of the key players are. But there's a real opportunity, even in secondary research, to get a real clear head start in terms of the selling part of the process when it comes to entering a market, and being able to really nail down who our key prospects are within that. And then the final part, I think, is almost, I'd say, the most important part of market entry research to a certain extent. The reason I say that is because it's often overlooked, is partner analysis. Now, what I mean by that is that very rarely will people look to enter a market and will engage in research and not think to do a bit of a market sizing, or not think to look a little bit at who our competitors might be. But surprisingly often it is overlooked to do a proper analysis of who partners might be, and who we might be able to partner with to enter a market. And there's a whole range of questions that can be asked there. So again, starting with, okay, what do we do in our current market, and looking to understand, who our partners are that have helped us sort of grow in our current markets. And then we can see, okay, are there equivalents in the UK market? But actually, there's a lot of different ways that this can be looked at, which often get overlooked. So first of all, thinking about what types of partnership are we willing to engage in. So it may be that in one market we have a kind of sales relationship, but actually in the UK market, what's more common, or what might be more beneficial, is more a technically integrated partnership with a different company. Like I mentioned, kind of alluded to earlier, actually going, as the third box says, there might be customers who are actually targeting your target audience in a slightly different area of the financial space, and going, you know what, that's a potential partnership for us, even though their product isn't exactly aligned with our sort of industry. If they're offering a service that's valuable to these people that we want to offer a service to, that's an opportunity for us. Similarly, that middle one at the top, who are the main bodies in the market? Actually, it's surprisingly often that you're able to form a valuable partnership with a trade association or an industry body as a new entrant to the market. Usually those people are going to be particularly interested in seeing innovation in the space, seeing new entrants, seeing ways that the market can be moved forward. And actually they're particularly open to speaking to and advising, and then potentially partnering, whether that's on a marketing or informational basis with new entrants to a financial market. Looking at who competitors partner with is obviously key. So when it comes to understanding partnerships, we want to know, okay, if we've looked at this, done our competitor landscape, and we've looked at those, narrowed it down to really 5 who are in exactly the same space as us. If we look on their websites and they're partnering all with this same company, we need to be looking at partnering with that company, or is there another company who are similar to them who we should be partnering with? So it's understanding, okay, what are our competitors doing and how can we link to that? And then finally, are there any kind of initiatives and programs that we're not aware of? So this is something that's come up quite a few times in the market entry research we've done, where actually a lot of the research, there's programs and accelerator programs or government initiatives that are there to support people entering a market in a very niche or specific area that they weren't completely aware of, and actually being able to partner with those programs, partner with those accelerators, really helps speed up time to market when entering the UK. I think that's a little bit more detail on the partner analysis side. The reason being, as I say, it's surprisingly often overlooked when it comes to market entry. People don't necessarily think that, to a certain extent, if we get a good partner, a lot of the other aspects in terms of prospecting, in terms of competitors, can become a lot easier, and a lot of barriers immediately get jumped if we find a really good partner to be working with. I realise we're coming to up to an hour, and we want to at least have a few minutes to have questions before we finish. So I'm just going to sum up really, and essentially looking at these different 5 areas. These are what we consider to be the building blocks of a comprehensive market entry research program. So if we can answer these 5 questions comprehensively, if we can know what our opportunity is, how big our market is, if we know what the key trends in the market are, if we know who the key people we're up against, if we know who the key people we're selling to, and if we know who the key potential partners are, we're going to have a valuable market entry research program. Very, very quick summary then. I'm just going to take away 3 things because we've talked about a lot. So if you've drifted off halfway through and there's only 3 things to remember, I've pulled these out here. First is just making sure to fully commit. One of the things Graham mentioned right near the beginning is so often, well, I guess it's very, very rare that nobody does any research before entering a market. That'd be a very bold move to make, but actually fully committing to a market entry research program, whether that is internally or with an external agency, making it an initiative that is resourced, that has time given to it, and it is structured rather than it just being something that's done a bit ad hoc is vitally important. Making massive use of secondary research and qualitative insights. So don't be tempted to just jump to, okay, we're doing research, that means a survey, which a lot of our partners often make that assumption. And then third, don't miss the value of partner research. Speaking to partners, finding out who the potential partners are is vitally important and something that so often gets overlooked. So yeah, thank you very much for listening to us. I know there's been a lot of information, but hopefully there's been some nuggets of insight for you there. And I don't know if there's any questions you want to facilitate there, Peter.
Thanks, Chris. I mean, that was once again a great masterclass, and you know, lots of stuff to take on board. And before we go to Q&A, and also thank you, Graham, for your stuff as well. Just want to add a couple of points. I mean, you know, we call our sort of product go no go, and it's the no go piece that people overlook. And in fact, 10%, 1 in 10 companies that we work with shouldn't come. And actually, sometimes it's the best money they can spend is finding out actually it's wrong to come. And so for a relatively small amount of capital, they're not making a very expensive mistake. So, you know, that's one thing to point out. And actually 20% of companies on top of the 10 have to go back and, you know, do a lot of homework and do a lot of preparation and think about their product, etc. So about 30% of companies, you know, need to do a heck of a lot of thinking before they commit to the marketplace. So, you know, I'm sure on this cohort, quite a few of those companies could well be you. So just once again, get it right. And then one other point I wanted to make, raising funds, sort of capital raises. So just this year alone, pre-COVID, I've been asked to present at 2 separate board meetings around getting the board to agree a significant spend, and in one case, raising an additional $2 million to enter into the UK marketplace. And the research that we did with Savanta and other customer insights basically got the funds released and signed off. So sometimes using this research to get board approval, investor approval, is significant, because what's produced is a high quality document that the board and the investors can interrogate and go, this is actually the information I was looking for, to be able to say yes. And obviously for you as the founder, or you as the CEO or the executive in the business, information is everything. So certainly there's a lot of pointers to good research.
Yeah. So
there's 33 people on this call, so there must be at least one or two questions. So just once again, unmute yourself, turn your video on, and ask Chris or Graham anything you wish to.
Oh, I'm all in the dark here.
Yeah.
Ghost.
Andrew, good to see you again, Andrew.
Yeah, well, sort of see me. Good to sort of see me. Look, I'm a floating face. Look, I have just a question. So, let's say you wanted to go to, and I'll just make it generic. You want to go straight to partners, and you go, hey, who's a good partner? How do you haven't gone on the journey me or whoever the company's asking you have gone on. So you kind of, ideally what you want is you want to start from the left side and go all the way through it. So you as an organization get an understanding of what's going on versus going straight to who are the best partners. How do you deal with that? Or do you, because ideally you want to go on the journey yourselves, but we don't necessarily need those answers, or we think we already know them. So can you just go straight to the, like, who are the best partners? Or is that really too hard for you?
So go, Graham.
I was going to say, you'll probably be able to come in here, Chris, with a lot better answer. I think one of the things I was going to say to it is that one of the key angles with partners is actually approaching it from a customer or prospect perception often, rather than a internal perception. So I think a lot of the work that we find our clients have often done is thinking about which partners they see themselves as being most aligned to their proposition, and the ones that are able to help them get to market in their view with the alignment to what they're trying to do as well as possible. What we often do is almost come at it from the reverse angle and actually chat with prospects and customers regarding the types of potential partner organizations that they would find credible, and the ones that they would trust, and the types of organizations that they would really consider as being the type of organization that they would, they would trust, that they would work with on something like this. So we often almost flip it around, almost more come at it from the customer angle, to look at the best partner opportunities from that perspective. But Chris, you might have something different out there.
Yeah, I think the other thing is just that, like, you're totally right, is that we would need to come on the journey with you to a certain extent. Now, this isn't even specific to partner research or even to market entry research. Is something that a lot of the market research industry doesn't put a lot of sway on, but Savanta is a key step in every project we do, is to do a kind of initial upfront internal workshop with the team that we're working with. So that would be yourself. Now, what often research agencies will do is they'll do a thing called a kickoff call, which basically means we'll go, okay, we'll have a quick chat with you. You put this in the brief. We'll just tell you a little bit about how we think we're going to achieve that brief. We'll go away. We'll come back to you in, 10 weeks time, and here's your answer, sort of thing. The thing we always look to do is more of a workshop, which becoming more difficult remotely, but it's still possible, and we still do a lot of, where you're actually going, okay, let's take a little bit of a step back. You've sent us this brief, or we've had that initial conversation to understand what you're looking for. Let's now have a conversation around, okay, how did you get to that point? What are the real goals behind it? And specifically then, what are your internal hypotheses, which is a really important point. So that can go for a number of areas, but so with partner research, it may be that you go, okay, our thinking is that we have these 3 partners in our current market. Our thinking is that there's going to be equivalent types of partner in the UK. So if there's company X in, say, Australia, we think there's going to be company Y in the UK that does largely the same thing. And that might be the hypothesis. And what we then go away and do is, as Graham says, we'll do 2 approaches. We'll do, firstly, testing that hypothesis. Do we just go, okay, look, they said there was X in Australia. turns out, yeah, they're totally right. There is Y in the UK. There you go. That's going to be a really valuable partner. It is sometimes as simple as that. But also, like Graham says, it's coming out from another angle and going, that bottom right box on the very first slides, that I don't know what I don't know, is going, is there anything we could be missing, basically, on our understanding of the market? And I think, again, not just partner research, but generally speaking, we find that a lot of the time when we're presenting back, we go, you know what, you across the area, you had these 10, 15 hypotheses that we came up with at the start. Actually, 10 of them, you're spot on. We went away, we did the research, you're totally correct on. But actually, there's these 5 areas in it. That may be partnerships, or it may be competitors, or it might be something else entirely, where actually we think there's a bit of a nuance here, or there's something a little bit different that we found. And I think that's where the real value comes. Well, that's part of where the value comes. I think there's still value in the former, in that what Peter says is that actually having proof that you can take to a board and go, look, we've had this validated is really useful. But yeah, it's something that you're totally right. There's 2 aspects to it. There's what Graham said is that we do try and come at it from a pretty fresh perspective of, okay, what would a customer think, or what would a prospect think? But you're totally right. We also do need to speak to you guys, get on board, understanding what your initial hypotheses are, so that we can also then just go and test those as well and see if those people exist.
Yeah, and also adding on, we're trying to drive, I suppose, towards best practice and what we think is the right decisions for companies to make. But listen, it has to be bespoke. So there's some stuff that you'll know that is the right answer, and therefore it's not needed. So it's not about doubling up. It's just making sure that all the gaps are filled in correctly and you're reducing the risk. As I say, there's stuff that you won't need help on because you already know.
Yeah.
Okay, that's good.
Yeah.
Okay. Sounds like everyone's not had their coffee for the afternoon or morning. Harry.
Hi there. Hi, Peter. I did. It was quite interesting. Thank you for the slide decks and the details. I did have a question. When we are looking to go to the market, our situation is slightly different in the sense we are not coming to the market with one product. So we do have a set of or a suite of services and products. It's a mixture. How do we go about with the competition analysis?
Yeah, that's
so do we do separate ones and combine them, or do we need to go through each product and find every competitor?
Yes, it depends on the situation. So yeah, that slide we showed about the steps in the journey, going it's not one size fits all, that you're totally right. There's other ways in which it's not one size fits all. And one of those is sometimes we'll have a company we work with who has got one product and they know what they're doing. Sometimes they have products with companies that have multiple products. Now, there's a couple of ways you can go about doing it. Often what we recommend is that if we're at that stage where we've got different products and we're not sure, usually, I don't know the specific case, but usually you're not necessarily going to fully promote all of those products in one go. It'll be a case of, okay, which one's going to be the leading product? Which one's going to be the most kind of important product? And actually that's usually our first step, is going, okay, before we even do a competitor analysis, let's look at the UK market from the other perspectives of, okay, what are the key trends? What are the key sizes in these different product areas? And then go, okay, based on that, it appears to be that these 2 products, or this one product, or whatever it might be, is the most valuable or has the most opportunity. Therefore, we'll do a deeper competitive analysis of that one. Now, if it so happened that there was an area where you have 4 separate products and all of them, you want to launch all of them at the same time, we would usually, if there's not a massive amount of that, recommend doing them separately and going, you know what, these are separate products. We think we should do that, a separate competitor analysis for each. But more often than not, it's a case of going, actually, in our initial entry, we're going to be focusing on 1 or 2. And so the first part of the research is to understand what 1 or 2 they should be, and then looking at those competitors specifically, rather than the whole load at once.
Yeah. There's also the angle to consider as to who your target audience is, and whether the target audience is the same for all of the products and solutions, or whether it varies. So, for example, if from the suite of products and services you have, they are all aimed at, say, the financial director at 10 to 50 employee businesses, then you can tend to look at it more in one go as the same competitor set because it's the same target audience. But if your products and services have different people that you're looking to buy them, that then tends to mean that it becomes more separate, looking at the different ones individually.
Yeah.
Thank you. That makes sense. If I have time, can I ask one other question?
Yeah,
That's okay. Yeah. This is related to the partnerships. So when we are looking out in the market, we are slightly confused about who should we partner with. Should we be partnering with other fintechs which offer complementary products, or should we be partnering with smaller consultancies which provides front-end consulting to the products and services that we offer? How would you normally go about it? Is it both, or is it a mix?
Yeah, I mean, the way we usually go about it is finding out, okay, what is it that we're going back a step and going, okay, what is it that we're looking to achieve in a partnership? So for some people, it will be that there's already an automatic option of, this product works best when it's integrated with this type of product, whatever. And therefore we know that the type of partnership we're going to be looking at is an integration partnership. I think often it's a case though of going, okay, let's take a step back in the UK market and look at what are the other players in the market doing at the moment. So one thing we did, there was a couple of recent projects where, they're in exactly that position. There's lots of different types of partnerships we could go along with, but actually which is going to be the most valuable. And what we said is, okay, actually let's look, there was these people 2 or 3 years ago who entered the market in a similar space. What did they do? What was successful for them, and how did they grow their revenues? And going, okay, actually this is a tried and tested format in the UK. That seems to be a potential way of going forward. The second is actually looking for who matches the business from a kind of target audience perspective. So I think one of the points that came up recently in a project was going, okay, actually we've been thinking about partnerships from who fits our product best, but actually there was a separate type of business who targeted exactly the same audience. And so like Graham was saying, a financial director at a 10-employee company, and actually going, you know what, actually our better option would be to look at partnering with them, because although we've got a different product, we have the same target audience, and therefore we can work together, whether it's an integration or a sales relationship to partner there. So broadly speaking, we try and take it a step back and start earlier. We would always recommend looking at different types of products, different types of partnerships. Yeah. But ultimately, it's going to be a case of coming back to what is it that we're looking to get out of that partnership? Is it a sales thing? Is it a technology integration thing? Is it a growing faster thing before we decide which one is most valuable? Yeah.
And the other thing I'd say as well, I think, is that I am a big component of that, looking at it from the customer perspective angle. So it's always worth, I think, having those conversations with prospective customers where you look at how they're going to make decisions and what frustrates them and what they're looking to solve at the moment. And understanding, for example, is your frustration at the moment that these types of services are very disjointed, and actually what you want is a single holistic offering, in which case the integration route suddenly becomes really powerful? Or actually is your perspective that you don't want to buy those services together for some reason? Either you don't feel you need them, or you'd be worried about that size of investment and you're always going to buy them separately, in which case we know, okay, the integration route maybe isn't one to go down, because that's not the way the market wants to buy. It's not solving a problem they feel they have at the moment. So that customer angle to it, and actually, well, how are you going to make your decisions and how are you going to buy is really important as well.
Useful. Thank you.
Thanks, Harry. I've just had a question come through on the chat around how long and how much it costs. And I mean, it's a good question, and I'm not trying to fudge the answer here, but ultimately it depends upon what the question is and when do you need it by. And what I can say is that the costing is tailored towards the early stage tech marketplace. So it's not going to break the bank, but it could actually help you win the business. So costing is well focused on you guys, and timing wise, it depends upon, once again, whether you want customer insights and other things. But generally speaking, around 6 weeks. It could be a little bit longer, but Chris and the team, they work very well with us, and often what we do also, we bring in outside market experts to sort of complement the whole research piece. So, Chris and the team are very focused on that deep research. We bring in market experts to sort of supplement that and making sure that it really feeds into a high quality final report. Our friends at KPMG, they told me just a few weeks ago that if they were to provide this kind of service, which they do to larger companies, they would charge 6 figures. We do not charge anywhere near 6 figures for this. So let's just say you're getting a better service, better quality service for a fraction of the price of the big guys. Right, we need to wrap. Unless there's any final questions, I think Chris and Graham have done a good summary anyway.
Peter, Hassan here. Can I chip in?
Hassan, quick as you can, please. Yep, sure.
Absolutely. So guys, just real quick, product market fit, right? So if you're a very sort of specific predefined sort of product or feature, say Afterpay from Oz or whatever, it's well defined, it's really clear. If you've got a Swiss Army knife, how do we sort of figure out the product market fit before we do the landscape analyses and entry and stuff like that? Any specific thoughts on that, please?
Yeah, it's a much more tricky one because it is a lot easier to, as you say, do the landscape analysis, etc. if you've got a clearly defined product in mind. Whereas if it's more of a Swiss Army knife, then it becomes something that could get very large and out of control very quickly. The key is, I guess, in terms of what Chris was talking about a little bit earlier, in terms of that prioritization stage and being able to narrow your focus as quickly as possible. And that can come from one of multiple angles. It can come from a more objective look at the market in terms of things like number of customers, potential growth rates, the size of competitor businesses in that space at the moment, to give an idea of how profitable and large and growing the space is. For that type of solution, it can alternatively come from the customer viewpoint and looking at what their pain points and frustrations and what they want to achieve, and then aligning that to your suite of products to see where the most alignment and overlap is, to prioritize the one that seems to be the hero product and the one that we should focus on first. Chris, I don't know if there's anything you'd add to that quickly as we a couple minutes left.
Yeah, given that we need to go, I think that generally speaking, we look at a few things. We look at what's the size of the market for each type? Is there different sizes for different ones? What's the competitor landscape look like? So is there one area that is very overserved and very crowded versus another one that there isn't many people involved in? And then the third is internal objectives, going, okay, is there a particular reason we would go with one of these products over the other? Or is there a particular criteria that one of these products would need to meet to be successful versus another? And we can then assess how the UK market matches their criteria. So it's a very quick answer, but those are usually the three areas we look at.
Thanks, Chris.
Thanks.
That's, I'm afraid, the end of this session. Thank you to Savanta for a lot of good insights about insights. And now, obviously, moving on to the next session in about 10 minutes. So you have time for make your coffee, pour a glass of wine, whatever works. And of course, the next session led by Edelman's, which is Edelman, not Edelman's, my mistake. They're a leading global PR company, offices around the world. They have a strong focus on tech, and they also have a fantastic program called Emerge that supports high growth tech startups. So they are very much focused on your space in the Emerge program. And we'll be joined by Jerry Wisniewski and also Martina Boris, who also once again focuses on the tech space. So come back in 10 minutes. The link's on the invite, and we'll look forward to seeing you again in about 10 minutes. Thanks very much and have a good day.